Welcome, wishing you all a very happy new year. My name is Simone Chandel and I am Head of Events at Women in Mining UK. Thank you for joining us this afternoon for our first event of 2022, kindly supported by Berenberg, reflecting on COP26. What will the impact be on financing the mining industry in 2022? Before we officially start, I would just like to run through the usual housekeeping points. Please note we are recording today's event. We will not be following Chatham House rule, and this recording will be available for playback on our WIM UK YouTube channel. So please do look out for it. If you could be so kind to keep your mics on mute during the panel discussion, that would be greatly appreciated. Your cameras may be turned off for now, but feel free to switch them on at any time. And we will be taking questions from our audience, time permitting, via the chat button at the bottom of your screen. I must give my thanks to WIM UK Events Committee volunteer Nicola Shaw, who is responsible for organizing today's event. Nicola, thank you as always for taking the time out of your busy day job to schedule and support Women in Mining UK. It gives me great pleasure now to introduce our moderator today, Richard Hatch, Equity Research Analyst, Metals and Mining at Berenberg. Richard, our thanks to you and Berenberg for all your help and support, hugely appreciated. I'd like to hand over to you now to kick off today's panel discussion.
Absolute pleasure, Ayman, and thank you very much for the opportunity, and thanks again to the panel for making the time to talk about COP and the impact on the on mining financing today. So just for introductions, delighted to introduce four great panelists. First, we've got Anna Legg, who's Head of Investor Relations at Horizonte Minerals. Anna's been Head of IR at Horizonte since May 2020. Prior to this, she's held a number of senior roles in communications, including Executive Director Communications at SolGold and Partner at Fletcher Advisory. Horizonte announced a $633 million US fundraise to complete the funding of the Araguaia nickel project late last year, which is great news and lovely to see it going. Ramon Barua is CEO of Aclara Resources. Ramon has been CEO of Aclara, which is a rare earths business, progressing the development of its asset down in Chile, having recently, from late last year, been spun out of Hochschild Mining, and the company raised capital as part of that spin out. Prior to serving as CEO of Aclara, Ramon was CFO of Hochschild Mining and held a number of senior roles within the Hochschild Group. Laura Coelho is a partner of energy and projects at Norton Rose Fulbright. She's a projects and renewables lawyer based in London with a main focus on Africa, the energy transition and the move to the low carbon economy. She's advised on several first of a kind and landmark projects within Africa, including first in country solar PV projects in Malawi, Botswana, Rwanda, Zimbabwe and Kenya. And then finally, Randy Smallwood is President and CEO of Wheaton Precious Metals, and he's also Chair of the World Gold Council. Randy is, as I say, President and CEO of Wheaton Precious Metals, which is an $18 billion US precious metals streaming business listed in London and in North America. Randy was involved in the founding of Wheaton, and in 2007, in 2007, he actually, I think it was before 2007, Randy, wasn't it? You've corrected me on this before. Prior to this, he held senior roles. I'll learn one of these days, Randy. Prior to that, he held senior roles at Goldcorp, and was made CEO of Wheaton in 2011. And as I say, he's currently the chair of the World Gold Council, and he keeps me busy with all of the deals that he's doing at the moment. Anyway, but right, okay, so thank you very much to everybody for making the time, and looking forward to an interesting discussion. So first, Randy, you went to COP. Be interesting to hear what your kind of key thoughts were, sort of around the conference and also around the mining industry specifically.
Sure thing, Richard. And first off, thanks for being here as a father of four daughters and and 3 granddaughters so far. This cause and this organization is very important to me, and it should be important to all of us. I hope it is. Yeah, I went to COP26, first time I've been. Went there in sort of a dual role. First off, as chair of the World Gold Council. It's the first time the World Gold Council has actually attended COP. But I also went there on Wheaton's behalf in terms of just trying to learn and understand more about what what's driving change in this world and the needs and asks behind it. And so, a quick little synopsis. Carbon is the new currency. It's one of the new currencies, and we as industries, especially the resourcing extractive industries, we're going to have to start measuring carbon as we measure dollars. Whenever we look at a project and calculate the NPV in a cash flow study or anything like that, we're also going to have to start looking at, and we are as an industry doing this, but it's going to have to become more and more important moving forward. We're going to have to look at the carbon weight of our decisions, and have a look at how we can be more carbon profitable, so to speak, i.e. not consume as much carbon, come up with ways. And that was clear all the way through the industry, or through the conference itself. Lots of press about fund managers and investors and shareholders, which if you ever want to get anyone's attention, that's the best way to get their attention, is through the shareholding side, because in the end, that's who pays us, and that's who rewards us. That's who I work for as an industry. But lots of push towards trying to find ways to get stronger on that front. And so the industries are getting better at that. I know in the mining industry, ICMM has pledged to be net zero by 2050. All the member companies of ICMM, which is the largest mining organization around the world. Even at the World Gold Council, we've committed to the TCFD financial disclosure for all member companies within a time period here. And so progress is being made. This is a journey as we're going forward. The reason we were at COP was to learn and understand more about what's driven out there. At the same time, I think it also reinforced the opportunities that we have especially in the mining industry, with a lot of the commodities that we produce. The recognition that these are going to be needed to try and improve our overall environmental performance, and that there's a real opportunity for us in the industry to truly deliver good, strong, solid, sustainable benefits back to society as a whole. And so, just a real highlighting of how important this is, and it's getting more and more important all the time. We've only got one planet here, so let's make sure we take care of it.
Thank you very much. Yeah, I mean, it is really interesting, the carbon comment, and I completely agree. I mean, our analysts over at Berenberg are incredibly bullish on the carbon price and have been for a number of years, and it's performed very well. But I mean, you can tell from the reporting of all of the companies, particularly that I cover, just have such a huge focus on reducing carbon emissions, making their targets more and more aggressive, and as a result, having to invest in various technologies in order to make it work. So Laura, perhaps over to you. What are you seeing from your clients following COP in terms of changes of strategy or requests for teach-ins around that kind of transition? And I suspect, given your background in renewables, you must be seeing a lot of focus from perhaps mining companies to look to try and invest in projects in order to reduce their carbon emissions and footprint.
Yeah, definitely. So in terms of my sort of normal practice areas, as you've said, sort of focusing a lot of work in Africa, and I've spent time living in East Africa as well. So I'm generally, from a practice perspective, involved on the other end of the battery metal supply chain, and actually involved in working with developers and governments in terms of actually getting battery storage systems onto grids, sort of co-located with forms of renewable power. So an example of these is I've worked on one of the first sort of grid-connected battery storage and solar PV projects in sub-Saharan Africa over the last sort of 5 years. I've been working on it. So what I'm currently finding is very much that my sort of existing renewables practice is very much linked up now with the mining practice that the firm also has. And it's very much that question about, that supply chain with the battery metals that are needed to power the energy transition. In terms of clients, so in the sort of the year before COP 2021, I definitely noticed a shift in the type of instructions that we were getting from clients, and also a broader type of clients as they all respond to the energy transition. A lot more private and corporate clients compared to the pure renewable developers and the pure sort of funders and financial institutions that we'd normally see. More fund clients as well. As corporates look at their role in the energy transition, as Randy was saying, and consider their carbon footprint, their net zero pledges and their decarbonisation budgets. We've also been helping clients to address their ESG agendas increasingly. And then following COP, so that was very much a sort of, I felt like a 2021 shift. It already felt like it was a different year. And then following COP, as you've said, it's that surge in the carbon market price that's, that we've really noticed, and a lot more. So I sort of previously worked on carbon, I think more at the start of my career when the carbon price was sort of last high. But it does feel that sort of it's now sort of beyond that point now, and things that were not quite feasible are now becoming feasible, and involved in a lot more projects around sort of natural climate solutions and that sort of thing. And the reason for this is the fact that COP26 provided a very positive message in terms of the carbon markets and the Article 6 sort of framework, and that provided a good sentiment to the carbon market. So yeah, a lot of sort of teaching requests from a diverse range of clients around carbon, wanting to understand how carbon works, where are the risks, what might their role be. So that's a very interesting area. And then lastly, I would just say long duration and energy storage is another thing to come out of COP26, the Long Duration Energy Storage Council. So really looking at, how storage technologies are evolving, how we look at sort of seasonal shifts and a real replacement for renewable power. So I'll certainly be watching, that evolution over the next few weeks and months.
Yeah, thank you. I mean, yeah, it is a really interesting sort of theme, isn't it? Just to see how there's so much focus on battery storage, and I think it's still quite fledgling just in terms of being able to make it work on site, particularly in some remote jurisdictions like Africa and certain African countries where the mines are in remote locations. But certainly speaking to sort of fund managers and those that allocate capital, you can see that there is a significant focus in terms of the market wanting to put money to work in new projects which have a focus in effectively reaching net zero, which kind of brings us on to our next portion of the discussion, new projects. So delighted to have Anna and Ramon here now, so they can talk about their two projects which they're working on. So we can perhaps start with Anna. I mean, Anna, you've just raised capital to build Araguaia. I mean, the project's been around for a while. I mean, how did that energy transition theme kind of impact and shape the raising process? Have you seen the cost of capital sort of change, and was that kind of almost the that aggressive push towards net zero the kind of almost like the starting gun that really sort of saw the project get over the line?
I can't say that it was timed just to coincide with the increased conversation around the clean energy transition. As you say, Richard, these projects, they take a long time to get to this construction ready phase. The team's been at it for over 10 years. So really it was a case of like a team having the foresight and believing in nickel about 10-15 years ago, and then a bit of a dose of the right time, right place. But it definitely shaped the conversation of the financing in terms of influencing the process of who we were speaking to and the conversations that we were having. Like particularly in the beginning, it was very EV focused, which for Araguaia isn't particularly helpful. It's a ferronickel project, so it will go into stainless steel, and stainless steel is often overlooked in the clean energy transition, and that's actually what makes nickel critical for it, because it's included then in most renewable energy technologies and the related infrastructure. So it definitely changed in terms of seeing nickel's overall role. And then we started to speak to more and more sustainability focused funds. I mean, even this year, we've spoken to a brand new one that, we've never spoken to before. And then traditional precious funds broadening their scope to include technology metals. I mean, La Mancha came into our funding. We were the first technology metal that they've invested in. So I think that speaks volumes. And then a lot more interest from generalist investors wanting exposure to the broader macro theme, and particularly out of the US. I think in terms of cost of capital, like I can't definitively say whether it's changed, but I think it would be fair to say, you know, we've all seen the headlines of the nickel price, I mean, particularly the beginning of this year. And if we were completing the financing, you know, back at our base case, which is $14,600 a ton of nickel, when we did the FS, like it would have been a very different outcome from when we did it at $20,000 a ton in November. So I think it's sort of watch this space. We've obviously got Vermelho coming up close behind, which is a battery grade project. So we'll see how that progresses, and you can ask me the question again, Richard.
I certainly look forward to it. Yeah, and certainly with the nickel price banging on again, it's up another 10%, I think, since you did it. So it's certainly performed well. And then Ramon, I mean, rare earths is certainly one of the areas which I find investors struggle the most to get to grips with, because unlike nickel, where we can look on the screen and see what the LME price is, or you know, your previous role as CFO of Hochschild, you know, we could look online and see what the spot silver price is and such like. It's a bit more tricky to work out the rare earth sort of market, and also with the Chinese dominance in that market also makes it a bit more difficult. But I mean, it's a fascinating project, and something which offers non-Chinese rare earth supply, which is so big just in terms of magnet production. So I mean, you've spun Aclara out of Hochschild, listed on the TSX. Can you talk about that process, how you're taking the company forward? Have you seen the kind of investor appetite, cost of capital change for projects such as yours? And, you know, especially because you're bringing that project online in the next sort of couple of years.
Thank you, Richard. Lots of questions. So please excuse me and interrupt me if I talk passionately about this and then I lose track of time. So please do stop me. So yes, you know, our project first started as a strategic initiative related to things that we saw in conferences like COP. No, there's clearly a trend in the world to become more electric, and we asked ourselves, what can we do in order to be part of that trend? As a funny anecdote, no, we saw, for example, that electric vehicles demand is growing exponentially, no? And we wanted to use that word in our prospectus, and the lawyer said, you know, using exponential demand is too promotional. So we had to go into the, you know, mathematical rules to determine an exponential curve, and we could demonstrate that, no? That projections of electric vehicles are growing exponentially. So we like very much to be exposed to something like that. And I mean, of course, we started looking at battery metals, but rare earths are not battery metals. No, rare earths go into the motor, and they provide special powers to that motor, and that's what allows, for example, a Tesla, you know, a $30,000 or $40,000 Tesla to accelerate faster than a Ferrari of $300,000. No, it's not the battery, it's the motor, and those efficiencies and that torque is achieved through these permanent magnets, you know, that are permanent, that are rare earths. However, we found that rare earths are not rare, no, and they're all over the world. So, but there's an inconsistency. So if they're not rare, then why China dominates that market? No, that doesn't sound right. And one of the reasons is because they have a special type of deposit, which is ionic clays, that have a very simple metallurgy. They do not have radioactivity, which is something very important. And then they contain the right rare earths, no? The ones that are associated to the electric revolution. And we were very lucky to find a deposit that is almost like a copy paste of what the Chinese have, both in terms of mineralization and mineral content in Chile, that we were able to acquire from a private equity firm. For the last 2 years, we have been developing that, improving the metallurgy, you know, working with the University of Toronto, with ANSTO in Australia, so top labs. And so we have a fantastically profitable project. And we decided to spin it off from Hochschild. and look for investors that would be focused on this. I mean, we did quite a successful IPO in December 10th of last year. We raised $100 million, but to be honest, it was not easy. You know, it was not easy first because, well, we all know how the markets have been performing lately, but also, as you point out, you know, it was a new story to investors, you know, who heard the words neodymium, praseodymium, dysprosium, terbium for the first time. So I think it's an ongoing educational process that we have embarked on, but we are quite enthusiastic about, you know, we have a totally high quality project, exponential demand, as I mentioned, and supply is going to be rather restricted. No, first because the Chinese have been mining these deposits for 50 years, since the 1970s, and we all know in mining that that deposits do deplete. As a result, we have seen the Chinese being quite aggressive, you know, in acquiring the other deposits outside of China. That is also a very important trend. But we remain, you know, totally independent in our shareholding. Eduardo Hochschild and Hochschild Mining remain as controlling shareholders. And prices, as you pointed out, is going to be an issue, no? Because the prices of rare earths right now reflect a transaction where a Chinese seller sells rare earths to a Chinese buyer, and those prices are averaged out in Asian metals, a supply of prices. However, what we believe is that ultimately, you know, we want, of course, we're not a commodity. No, we're not a commodity. We're going to be probably selling our product, you know, through long-term contracts with B2B off-takers, no, the Teslas of this world, who appreciate two things, no, primarily. First, they are going to appreciate the environmental performance that we can achieve, and you know, the clays that we have can be extracted without using explosives, no crushing, no milling. We're going to recycle 95% of the water. And as I mentioned, you know, there's no radioactivity. So I think they're going to appreciate that very much. And the second argument is going to be securing, you know, a supply chain outside of China. Right now, all the electric vehicles need to acquire their rare earths through motors built in China. And there is a very strong trend that we are seeing also from Western producers diversifying their sources of supply. So I think those are two very powerful reasons for us to be successful in selling our product.
Yeah, I think it's I mean, it's going to be a great story, I think, and certainly from the point where you pitched it from the initial sort of Hochschild story, it sounded very compelling. I'd suggest that anybody who's interested to learn about rare earths, then have a look at the stuff that Aclara's got on CDAR. It's all very informative. So look, just switching it over to kind of investors allocating capital. Randy, I mean, you're a provider of capital to the mining industry, predominantly to base metals, base and precious, but either precious metals as from base metal mines as a byproduct, or just purely taking a gold stream on a precious metals or silver stream on a precious metals asset. Have you seen much of a change in the number of future-facing metals projects that are coming to you, and perhaps either with, you know, like a gold byproduct or silver byproduct? I mean, you have done your cobalt stream with Vale a few years ago as well. I mean, are you able to achieve those satisfactory terms, and how competitive is that landscape for allocating capital?
Well, we are blessed with increasing demand across the spectrum. You know, especially, you know, commitments towards electrification is just going to require a lot more metals around the world, and so as long as the industry needs capital, there's going to be opportunities for us. You know, Wheaton, we are a streaming company, so we don't actually operate mines. And in fact, you know, what we do is as Richard, as you described there, we purchase the rights to non-core byproduct precious metals from a lot of mines, and especially a lot of copper mines and nickel mines and lead zinc mines, where we go in and buy the gold and the silver from these, but free up a bunch of capital for the operators to build or expand or grow their businesses and push those things forward. And so, you know, the advantage for us from a net zero from a carbon loading perspective is that, is that, you know, most of our carbon burden comes from scope 3 emissions, or scope 1 and scope 2. In fact, Wheaton from scope 1 and scope 2 has been net zero since 2015, just through using offsets. But, you know, our company is relatively small on scope 1 and scope 2 level. Scope 3 is at the partner side. That's where we can help, and that's where we can contribute. And I've always said that's the difference with streaming versus the traditional royalties, is that streams are partnerships, and we're constantly looking for ways to help our partners be better. We have an overlying mantra in our company that the stronger our partners are, the stronger we are. And so we owe it to all of our stakeholders to make sure that we can do everything we can to help our partners be better. And a lot of that's through ESG. We were the first of the streaming/royalty companies, and by far the strongest and most committed to funding sustainability initiatives in the communities around the mine sites to deliver us metal. Even though we don't operate these mines, we still get metal from these mines, and it's just the right thing to do. But it also helps our partners maintain stronger social license. But the other area that we really focus on is and we're putting more and more focus on, is helping them improve their own decarbonization efforts, looking for ways to help co-fund programs in terms of electrifying circuitry, or coming up with more renewable sources of energy. You know, one of the challenges in the industry is the fact that most mines are in remote locations, and so it typically is very tough to get access to power, to grid power especially, and that means you wind up having to have more costly carbon loaded power supplies and stuff like that. So we're constantly looking for it, and we do have the advantage as a streaming company. We do see a lot. Our technical teams, our review teams, visit lots of different operations around the world, and so we do gain a lot of knowledge through that. And what we try and do is become an agent of change. It's something that we challenge our own technical teams to look for opportunities to help our partners be stronger. And if it means helping to co-fund programs that go down that, we're not scared of doing that. I mean, I think we as an industry have to take a broader view in terms of what we provide back to this planet, and continue to improve and continue to highlight, the benefits that we already do deliver, but continue to improve on how we deliver those benefits.
Yeah, thanks, Randy. Very interesting. I'm still waiting for you to do the green stream, but I'll fire on that one, and I'll take the credit when it's due.
All right.
Yeah, indeed. So, forgive me, it's slightly remiss of me. I did mean to ask Ramon and Anna earlier on about the thoughts on the kind of longer term demand outlooks for rare earths and nickels. I mean, Ramon, you've talked about the exponential sort of demand profile there. And the fact that the Chinese domestic supply is going to reduce, but I don't know if you've got any other sort of comments that you just want to reiterate, or I think you did a very good job of sort of putting it down, really. But is there anything else that you just want to say about the rare earths market?
Sure. No, I mean, important to mention that, of course, electric vehicles are capturing all the attention, but rare earths have an application in everything that is related on improving efficiencies of electric applications, no? So the second one in importance is going to be wind turbines, especially offshore wind turbines are using, rare earth magnets in order to lever the power of the wind that reaches a turbine in order to generate more energy, no? And that sector is also experiencing exponential growth. Then we have, for example, in China, a big story for rare earths is air conditioners, because we all know that China has been having, significant energy problems, and they have strong regulations in terms of the efficiencies of the air conditioners. And in order to improve those efficiencies, you need to use rare earths as well. And then there are other applications, whose demand is not even quantified. But think, for example, about drones. And drones today are toys, but very soon they're going to be carrying a load, and they're going to be carrying passengers. And they need to carry the weight of the battery, the motor, and the load as well. So those motors are going to need the torque to pull all that weight, and rare earths are absolutely vital in order to accomplish that. So electric vehicles is just, the spearhead. But as we move to a more electric world, there are lots and lots of applications that are going to need rare earths, no?
Thank you, Ramon. Really good. Yeah, I mean, it's a fascinating area. I think the market's going to be a lot more focused on it in the next sort of couple of years and plus, really. Certainly we are. Anna, I mean, views on the longer term sort of demand outlook for nickel. I mean, it's a pretty consensual long if you look at the supply and demand dynamics of that market. I'd be interested to hear your thoughts.
Yeah, I think, like, you know, the consensus is that there's going to be you know, a huge demand supply deficit. We're already starting to see the impact of that now, but I think the consensus isn't there on you know, how huge that demand is going to be. I mean, I think conservative estimates are that it's, you know, it's going to double by 2040. But according to the IEA, demand will actually grow 19-fold if we actually want to have a chance of meeting the targets set out by the Paris Agreement. So it's a quite a big unknown. And then, you know, the supply, when we come to talk about that, it just isn't there. I mean, last year was a deficit of around 180,000 tons. You know, analysts saying it will be probably a balanced market this year. But the new supply is coming from Indonesia. And when you're talking about nickel enabling a, you know, net zero economy, that obviously poses quite a few issues. So yeah, it's a really interesting time for nickel, and, you know, particularly from our point of view, like on the London market, I think there's one other pure play nickel company listed. So you know, Australia and Canada do a bit better with a few more, but they're, you know, they're junior companies. They're very long lead time to production. So it's something that the industry really needs to look at, and you've started to see that already with the corporate activity that's been flying around and then backtracking on.
Yeah, no, I'd agree. I think, yeah, both recycling, I think, is going to be a very important theme, and also, yeah, I mean, to your point, BHP's recently done a deal with Kabanga Nickel over in, what's the asset? Tanzania, Zambia? I'll stand corrected.
Tanzania.
Thank you, Tanzania. Got it right first time. Shouldn't have guessed a second. Yeah, so I mean, interesting to see the big sort of majors go into jurisdictions which they previously sort of said were unacceptable to them, or not they weren't willing to gain exposure to. Laura, perhaps can you just sort of chat about a bit more about kind of the landscape for transactions, how that's changed, you know, now that this kind of the energy transition theme's taking hold? I mean, are you seeing a lot of sort of increased appetite for transactions, and where do you kind of see that going in the kind of area in which you're working on?
Yeah, so thank you. I think the sort of increase that I've seen is as I say, sort of the corporate client base. Corporate clients looking increasingly at innovative structures and solutions. So an example of this, and I think Randy touched on that earlier, is mining companies in remote locations or on grid, but aware that the grid supply of power from the local utility is fossil fuel intensive, and wanting to take control of their electricity supply and green it as much as possible. So for example, you know, we're involved in transactions involving renewable developers providing renewable plants and equipment to mining companies to fit their demand, what, you know, their current load, what they need, and replace existing gen sets if it's a remote location, or seeking to displace conventional forms of grid connected power. So that is an area definitely that I expect to increase, and it's mining companies, but it's not just mining companies, it's also other corporates, you know, where they may be located in emerging markets, looking at sort of, I guess, it's a slightly easy win in terms of improving their carbon footprints. There's government sensitivities around doing that, that we're involved in terms of mining companies, again, being sort of the best customers where they are connected to the grid of government state utilities, particularly in Africa. I'm seeing that. I've seen corporates getting much more involved in trying to tackle the energy transition, and also the fact that the technology itself is just changing rapidly. You know, it's just keeping up with it. I think Ramon's mentioned, you know, a few examples of there. It's just that, you know, it's constantly evolving, and different forms of storage technology, different forms of improvements in modules and turbines and that sort of thing. So, you know, it's a very exciting time to be doing what we're doing. There's also that sort of natural capital point, and I know that Randy touched on that at the beginning, in terms of sort of project plus structures. So not just a project, for example, that may supply clean power, but projects that also benefit communities. And there's that valuation of natural capital that's happening in community benefits and conservation benefits, particularly sort of alongside the uptick in carbon prices. So it just means that in terms of sort of pipeline of types of projects, there's just a lot more sort of interesting work there and interesting structures and initiatives that we're seeing. And, you know, and I expect that to remain the case. So I think it seems to be that it's sort of corporates and large institutions sort of taking matters into their own hands as well in some emerging markets. So a lot more sort of private players getting involved is what we're seeing, you know, not just waiting for governments to sort of take the lead.
Yeah, no, I agree. I mean, I think, you know, from some of our coverage, South Africa, for example, is looking to, well, the mining companies in South Africa are looking to put more increased renewables in order in terms of power generation. And then I'm just seeing tech hit the screens at the moment. You know, it's the second announcement I've seen from tech in the last 24 hours. This is a agreement with CAT to work on zero emissions haul trucks. And then last night there was an agreement with Jetty Resources as well. So, you know, there's a lot of focus on this from the miners. Very interesting discussion. So I'm conscious of time. So just sort of to close, I mean, perhaps we can just go around the four panelists and just ask the same question. In your view, what do you think will be the biggest challenges to achieving COP targets from a mining perspective? And perhaps we'll start with Ramon.
Thank you, Richard. Look, I think of course, at least in our experience, I think the biggest challenge going forward is going to be permitting new projects. No, I think Anna mentioned that as well. There's a long lead time for projects to come into production. However, having said that, I think and what I mean, myself coming from a gold and silver company, and coming into a rare earth company, the message to the communities and to the regulators who are going to be permitting these projects, I think the story is totally different when the product that you are going to be producing is one that is associated with saving our planet, no? Reducing temperatures and decarbonizing skies is a very strong narrative compared to other types of mining, no? So I do see a path forward. But permitting and the speed at which these projects will come on stream is going to be an issue, no? Because I don't think it's going to be easy for the mining industry to support this exponential demand. As a result of that, we would anticipate, you know, prices of these critical elements, and we're seeing that in rare earths recently. We're seeing that in lithium. But I think that is going to be a trend going forward. And ultimately, you know, consumers will need to be prepared to pay higher prices for these elements if we want really to have environmental solutions to our planet.
Thank you very much, Ramon. Bye, Clara. Anna, could you perhaps add your thoughts?
Yeah, I think adding to Ramon's comments, it really is for me, having been in the junior space for so long, it's the lead time. And I think you're going to see, out of necessity, investors having to look at much smaller companies than they ever have done in the past, and much earlier stage, to help them expedite these projects. Like, lots of them, it doesn't always need to take this long, but they struggle with financing and they're operating with lean teams. So I think you'll see that change, because it will be a huge challenge. And then secondly, sustainability credentials and genuine credentials. You know, we're now part of this sustainability focused supply chain, so there's going to be more and more scrutiny across all areas. And I think it really needs to come from a place of you know, not just a PR exercise for headlines. It's actually what we're really doing, and it's achievable targets. So I think, coupling expediting operations alongside like integrating innovation is the biggest challenge for me. And I think it will require quite a different skill set for boards and management teams. So a little perhaps plug for WIM. Hopefully we'll start to see more women on the boards and management teams with different skills.
Yeah, quite rightly so. Something which we've been sort of pushing for in our research as well, on our ESG research, to improve that board diversity, and it is improving, but I agree it needs to speed up. Laura, perhaps you might be able to add your views.
Sure. I mean, definitely echo that sort of view on the holistic approach to what's needed to enable the energy transition. And it just seems that it's often a sort of very segregated view is taken, and more acknowledgement of the essential role that mining has, and the types of investment and that are needed given this huge uptick and surge in demand that we're expecting to see. I was going to say the same as Ramon, to be honest, around sort of key issues that I'm seeing is around sort of government enabling regimes and regulation, and either too much regulation or retrospective regulation and sort of short-termism view by sort of host governments. I think that's sort of what I see, and as I've sort of mentioned it before, around sort of sensitivity about mining companies as electricity off-takers. If you're looking at renewables to mines, for example, I think that could be sort of where I can really see delays, and I certainly see that on projects I work on. So potentially comes back to the capacity building within governments, good dialogue with governments at all levels, enabling them, a more collaborative approach to be taken to the types of projects and investments that are needed.
Yeah, no, I completely agree. I mean, I'm sure that everybody on this seminar would have seen that Rio Tinto had their permits revoked for Jadar last week, which they've allocated $2.4 billion of capital into. So the Serbian government have revoked permits, and that was for 60,000 tons a year of lithium, which was going to go straight into EV. So it's tricky to get projects permitted if you haven't got that social license to operate. Randy, perhaps ask for your views on that subject in terms of just those challenges to achieving the COP targets.
Well, and it's interesting. One of the other aspects that came out of COP, I don't think I really mentioned it the first go around, but was the concept of circularity, of getting to the point of recycling more and more, and that's one of the things that society as a whole also needs to focus on. When you sit and look at a lot of the resources that are being used out there, they are fully recyclable. It's a matter of how much value society puts on that, and it was something that really sort of became apparent to me, obviously as chair of the World Gold Council and a precious metals focused industry person. Gold has achieved that, and there's lessons to be learned. When gold is produced, it always gets reused. It never gets wasted. It's got 100% recycling, and in fact, when gold is traded around the world, only 2% of the traded gold on an annual basis comes from mines. The rest of it is actually being recycled and reused as a store of value or a measure of value. So there's lessons to be learned there for society in terms of the gold space. But the other thing, and you mentioned it, Richard, the Rio losing those, having those permits rescinded on the lithium assets. We also have to take some ownership in terms of, as a society, in terms of the commodities that we need and we use, and we can't continue to have this NIMBY approach. And I sit there, I'm calling in from Vancouver, Canada. Canada, of course, incredibly resource rich, but also very, very technically strong and astute in terms of, I'm confident that any resources that we mine in a country like Canada, and there's plenty of countries like Canada, but in a country like Canada, at least we know that we can do it in with some of the strongest environmental standards, some of the strongest social principles in terms of moving it forward. And so this approach of not in my backyard is just wrong. If you're a consumer as a community, you should be doing whatever you can to also provide and control what you're delivering back into society and what you're consuming, and help source that. And so I see things like like this Rio Tinto incident, where you know, unfortunately, it's now going to just shift that production elsewhere in the world to communities that are willing to do that in order to increase their standard of living. But I just, you know, I think there's some errors in the way society is approaching that. And I think that what we have to do is embrace the fact that we are net consumers. So let's bring these into our communities and try and bring this back, but do it the best way we can. Take it to that level, and not take the approach of not in my backyard. That's just irresponsible, and unfortunate. And I hope that moves forward. So you know, in terms of the challenges, in terms of making some of these targets, it really, the biggest challenge in the mining industry as a whole is infrastructure, and really it comes down to power. If you can come up with renewable power sources, whether it's hydroelectric, whether it's wind, whether it's solar, you know, that is the biggest net consumer. And you know, I think it was Laura that said early on, you know, it's great to tie into the grid, but if the grid is a coal-fired or fossil fuel powered grid, you're not really gaining a lot. You do get focused pollution versus, you know, spreading it out, but then hopefully better controls in terms of managing that. So there is some slight benefits, but really not what we're striving for. What we have to strive for is better infrastructure across that. And it's a challenge when you have existing operations to modify and change that infrastructure. But when I look at the new projects like Ramon and Anna are involved in, you know, we have a chance now to build these right, to build these the proper way and make sure that they're done that way. And that's the opportunity. You know, the one, I guess, advantage that we have in the industry is that resources don't last forever. Individual deposits and ore bodies don't last forever. And so we always have a chance to refresh how we build these things as these new projects come on. And I think that's where the great opportunity exists, I think, with projects like Ramon and Anna are pushing forward, and so many others. So you just got to do it right and get better at it.
Yep, no, I completely agree. I mean, that the interesting anecdote is that Rio's project is, I think the actual footprint of it is tiny. You know, above ground is an underground project, so it would have a very small physical footprint. But if you can't get that community buy-in, then it doesn't happen. So let's see how it goes. And I'm going to throw one curveball in there for you, Randy. Look, I mean, everyone's focusing on nickel, copper, rare earths. How is gold still relevant, do you think?
Very relevant. Yeah, in fact, in the face of the collapsing crypto world, which has been portrayed by so many as an alternative to gold, gold is the only stable coin out there. You know, just to use that language, and it's becoming very, very obvious. You know, the inflation issues that we see. Let's define inflation. Inflation is a devaluation of fiat currencies relative to hard assets. That's what inflation is, and that is what we're seeing. And so you better make sure you have some good hard assets that can. Sorry, just hang on. You better make sure you have some good hard assets, that, like liquid assets, like gold. And so, you know, gold has always played a role in terms of maintaining sustainable measures of value, all the way from central bankers around the world down to Indian women that you know, wear their wealth in their jewelry and so on. Gold has always played that role, always will play that role. I mean, that's the reason that gold has survived, is because it is truly the stable coin of today's world. And so the other opportunities that we have in the gold space, as I mentioned, gold is incredibly efficient and very low carbon when it comes to the trading and the actual activities behind gold and refining gold. It doesn't, you know, it's got 100% recycling rate. As an industry, the more we can do to decarbonize the mining process, it gets the whole gold market back to zero. And so there's an incredible opportunity for us in the gold industry, and we are focused on that at the World Gold Council, and you know, as an industry as a whole, in terms of how we get there. So, but I think in today's world, gold has never been more important than it has been in the past, just because it's a sustainable store and measure of value. And that's what we all need in order to preserve our own net worths individually. That's what's required for a good, strong, sustainable society.
Yeah, $1832 an ounce shows that. So cool. Good. Thanks, Randy. Cool. Well, look, I mean, if anybody wants to, we've got a couple of questions. I don't know if anybody else wants to jump in. I'll start with the ones we've got, and then I'll open up the floor if that works. The first one, do you believe there is any real possibility of adopting nuclear energy, such as SMRs, to resolve the issue of providing electricity to remote sites? I don't know, perhaps Laura, that might be one for you to sort of have any views on that. I know we've got a fairly bullish uranium view over here at Berenberg, so we'd probably say yes, but Laura, your view?
It's not something that I've seen. I mean, it's certainly nuclear. It's a predictable flat baseload form of power generation, but I haven't seen that proposed as an option. I've seen sort of various of hybrid types of forms of power supply, evolving a form of storage, a form of renewables. Like I know that we've got there's a Rio Tinto project in Madagascar, for example, that's using wind, solar, and battery storage. I think as sort of part of a combined hybrid solution. But no, I haven't seen any sort of form of sort of captive nuclear option. But it's certainly something that I'm going to look up now, having had that question. And it shows that there's a whole array of sort of technologies out there. Sort of pumped hydro storage is another one that's an interesting one. You can sort of get a difference in height between an input and an output, and pump water up somewhere, push it down through turbines. The power generation that can come out of that, and how that relates to locations of mines and sort of use of decommissioned mine shafts and that sort of thing. So yeah, there's many different forms there to consider.
Yeah, no, I'd agree. I mean, I think actually quite interesting. I think the technology is progressing, but it's not quite there fully yet. So perhaps remote sites less so, but more developed locations, perhaps that could still work. But it's being a zero carbon baseload power, as you say, is a very sort of clear opportunity for nuclear. But and there's not enough supply. And more demand. But again, I think it goes back to Randy's point as well. Not in my backyard, and nuclear's got a fairly sort of mixed track record in the past, and I think that people have to become more comfortable with it to have it in those locations. The second one is just a question about how the listed companies are engaging with their investors, just in terms of, has the shape of the conversation you're having with your shareholders changed, with a focus towards kind of climate change and the energy transition? I would imagine yes, given the fact that it is a major theme which we speak to as sell-side analysts, but I'll defer to one of, or all three of, Anna, Ramon, and Randy.
Yeah, maybe I can start off, just because it was interesting for us, being a Canadian company that was listed on the Toronto Stock Exchange and New York Stock Exchange, to, in the latter half of 2020, list on the London Stock Exchange. And just unfortunately, there was a pandemic in the way of meeting people face to face, but lots of virtual meetings, and just the change that we saw in terms of questions on sustainability, on ESG, and the importance. There's definitely a head start in Europe as a whole, and definitely in the UK, in terms of this being a real focus. And it was actually interesting, because I think it actually prepared us for changes that are, as that spreads around the world, and we're seeing more of that now here in North America, in terms of questions and focus and interest on that. And so it is definitely becoming more and more of an issue. It's playing more and more of a role. And I really did see that up at COP, the number of different panels I was on, there was a lot of different fund representation, defining how they were going to push forward. And we all saw Mark Carney's alliance in terms of trying to get fund support to push down that path, and that's just going to continue. That's a momentum that's just, it's got some momentum, and it's just going to continue applying itself going forward. So we've definitely seen that play out more and more, and I think the industry is responding. Disclosure has always been one of the biggest challenges of the mining industry, in terms of outlining and highlighting some of the benefits that we provide, and so we just have to get better at that. but we also have to get better in terms of how we deliver those benefits and those sustainable things. So it's a constant journey of improvement. And I compare, I mean, I think I've got more gray hair than anyone else on this panel here. I compare the industry to when I first started in the industry, and we have made significant improvements, but we're not done. We've still got a lot of work to do, all the way from diversity objectives, which is very important it should be important to everyone, all the way to our performance and the footprint that we leave behind. So we're making the right steps.
Great.
Yes, from our side, Richard, what I can tell you, and something that I'm quite excited about, is that, Randy mentioned that these new projects needed to start well, no, in terms of the environmental footprint, and I mean, really, the clays set the stage in our case to do a fantastic work on that front, something that we're very proud about. And we believe that story, on the ESG front, and then the second story, which is related to the product that we're going to be again producing, that are associated, with improving our planet. And thirdly, on diversifying supply chains from China. We believe that those three stories, would be interesting and attractive, not only to the institutional investor, but also to the general public. And most importantly, to millennials as well, who are the ones who finally are going to be inheriting this planet. So from our side, although we're going to, of course, continue to pursue the traditional IR efforts, we are also developing a strategy, to be much more present in social media and reaching generalists, retail investors, and millennials, because we believe that we have a strong narrative. And ultimately, what this should result on is at least one of the externalities should be, addressing what Randy also mentioned. We want to create awareness that if we want a better planet, we need to mine for the minerals that are required for that transition. Otherwise, I mean, you can't have both. No, you can't have a better planet. You can't have lower temperatures without changing the energy grid and the energy and how the applications, the fuel in which the applications run. So we need to bring that message out. The narrative is strong, and I think it's our responsibility as mining companies to make sure that we deliver those messages. And we're on it.
Great, thanks, Ramon. And Anna, from your side, I mean, you've probably done a few hundred analyst meetings or PM meetings with the fundraise. So,
yeah, I mean, it's become a question it's at the start of the presentation, particularly on where Araguaia will sit on the carbon curve against peers and what our emissions reduction strategy is. But from our side, I mean, we've just significantly increased our sustainability related reporting. So in 2 years ago, we released our first standalone sustainability report in line with GRI standards, which, I mean, that's so rare with pre-production companies, particularly in London. I think that really goes to show the commitment that Horizonte has, and it enables our stakeholders to see what our goals and objectives are and how we're tracking against those. So, before we're even producing, I'll have had 4 sustainability reports out, which I think is quite something. And it's important, and it's not just for investors, it's for all of our stakeholders.
brilliant. Thank you so much to everybody. I think we're bouncing on the time. So before I hand over to Nicola for a closing comment, thank you so much to everybody for attending, and thank you so much to the panelists for a really interesting discussion. You've kindly given me some ideas for some notes, so thanks very much. I'll pay you when I see you. But thank you very much, Ramon, Anna, Laura, Randy, for making the time, and for Women in Mining for giving me the opportunity to host this one. So thank you from myself and on behalf of Berenberg.
Thank you, Richard, and thank you again, everyone, to all of our panelists for joining us today, and also to Richard for moderating today's session. I hope you enjoyed it. So if this is your first time
attending one of our events. Women in Mining UK is a volunteer-run non-profit organisation that promotes the employment, progress and retention of women in the mining industry. Membership is open to anyone, regardless of gender or where you are located in the world, and you can join for free on our website. So our next event is coming up on the 24th of February at 3 p.m. GMT, which is being kindly supported by Buchanan, and WIM UK's head of comms, Ariadna Peretz, is moderating that session. And the title is The Good Pitch, the do's and don'ts with mining media. So we hope that you can join us for that session as well. So look out for the event and registration details on our website and our newsletter. So that's it from us. Thank you again to everyone for joining us, and we hope you enjoyed it. Thank you.